Hello and welcome to this 369 Wave Rider Trading System methodology. It has several components: linear momentum, momentum bias, momentum strength meter, and GAN levels for entering, exiting, and stop loss as you make up your decision. Let's go through the structure of the market this set represents so you can be an effective startup profitable trader. We're looking at that tool set right here. As you can see, we are adding two linear momentums. You may not have heard those terms because these are 369 forecasts on internal algorithms. The rules are pretty straightforward. Let's focus on the linear momentum. First two oscillators are representing linear momentum, which one is slower and one is a little faster. The top is linear momentum of 34 period. Another one is a linear momentum of 55 period. The bottom is a composite momentum using various strength meters to giving us the strength of the move. To understand the linear momentum, when it is green and rising, during these periods, momentum is on its bullish leg, but the mean is sitting at 0. So think about it little smartly. Think about a rubber band pinned at a level 0, and I'm stretching the rubber band initially because I got excited. Eventually, I will reach a breaking point. This breaking point is going to create an issue. So what happens in the mean reverting markets? It will start falling back towards the mean. We are pinning that mean at 0. At the same time, when this momentum is rising, you're stretching the rubber band on the positive y-axis. This is the y-axis. You are stretching it from 0. Look at the bottom momentum. When this is also green, the momentum is pretty strong. When they all align, they are pretty strong, and what do we have at this moment? We have these GAN lines. We enter at this point. This decision has been made. You enter here on this line. Don't have to be too picky, but you put a limit order somewhere right here. As you start seeing this, market is going down. This is doing some little pullback. It went down 9 points, and you can see momentum was red. It is shifting internally, showing it as yellow, just like in the street lights. We have red light on the street to stop, yellow get ready, green go. So this structure told us to go long here, and you get 20 points. So that is first rule of bullish behavior. The second rule of bullish behavior, let's understand here. This mountain has been stretched on the negative side of linear momentum. This is an offset of 0. We are pinning there now, but it is red and rising. Red and rising means momentum is rising on the negative side. That is why it is red. When this momentum is falling, coming back to the mean, that means the rubber band which was stretched to the extreme is now falling and coming back to 0. So if you look at this falling and coming back to 0, what is happening in the momentum? So momentum is, as the linear regressions, momentums, you can think about that way, are getting compressed to 0, reverting back to the mean, because the market is coiling across the mean. So right here, when this start happening, what's happening on the momentum? During this phase, momentum is telling us that is rising on the negative side. So the bottom tells you which direction the action is taking place. It is taking place on the negative side. I'm stretching. I'm falling back towards my 0. I'm falling back to 0 means the market is going to fall. At the same time, you can see the momentum is pushed on the negative side. You put a stop loss on the top of the line and you put limit orders and you get 15-20 points. This is how you read that. Now the stretching of, not only we came back to 0, we also went on the other side. Now you think about it, but my rubber band was here, I stretched it on the top side, I brought it back, and now I'm stretching on the negative side. So plus y minus y. So I'm going to the negative side of the axis. And this is where when I came back to 0, I was not done. I stretched it on the other side. I'm now going to stretch the rubber band on the other side. And this is what it is showing in red. You see this? So starting from here all the way to here, the top, the momentum was down, as you can see here as well. So what happened here? When this momentum, the rubber band stretch went to the extreme, it came down. Same thing on the other side. When the other side you pulled the rubber band on the minus y axis, it also got exhausted. Now it is coming back from the bottom to the 0. So we have a 0. I'm going above the 0 and I'm coming down from above to the 0, and then I went down on the negative axis below 0, and then I'm coming up. This is coming up section. So let's mark that section. Let's watch where the verticals are vertically. So let's color it also, so we're not confused at all. So what's happening here? Since the rubber band is coming up, even though it's coming from the negative zone, it is falling. The negativity is falling. The negativity is falling. You can see the momentum is rising in the positive direction. And there it goes. You just put a limit buy, and these are 9 point. Let's see. Yeah, these are 9 point separations because we do everything through 369 lens. So 369 momentum is giving us the strength. 369 linear momentum, two different linear momentums are giving us the bias. So now you can see this. If they all come together, this is how you have to wait for it patiently. You're not confused. You know where the direction is. So I hope this helps you. So now this peak is heading down. As you can see, I'm looking for the negative side. So this negative side came here. This was probably a loss because you went, market was here, you put a limit order here to go short, you attempted that, it knocked you out, no problems. Then you wait for the next one. Next one, momentum is still heading down. This one again became red. Again try it. This time you won. So maybe you go with double contracts. You made your 500 net. This one, momentum was, market was about to close, but you can see here the momentum at this point was green. At this point, you can see here the negativity is very low. They're not trying to stretch too much on the, just like they did here. That on this, they're not stretching too much on the, they're coming down. This is like, since the trend is coming, it moved extra down a little bit, but we don't know that, right? So it went up. It's not going that far up, but this momentum has shifted. So here you can also, if it is going to go, buy here. So if you had one loss, if you do one by one, let's say one contract only, lost here, break even here, 500 here. So net home, you always go positive. So this section, you had $500 profit. This section, you had $500 profit. Or maybe $1,000 profit. This section, you got $500 profit. Now this is the same day, 12/7. How aggressively you want your cash? This is again $500. So in this entire day, if you don't give up your campaign, and this is again a $500. So you, if with one lot you should have made, if you traded long hours the way we do, you trade long hours. So right here, with one lot, with this methodology, you should be making at least 1,000 to 2,000 a day if you can read the market correctly, and if you can work on yourself and your emotions to follow the rules. Rules, I just gave it to you. This is level 0 trading system for anybody to be able to get started with making $1,000 a day. Work on it before they can jump on to the next levels. It is also offered free for level 2 participants. I hope this helps. And once you get on to level 2, all these 4 indicators are coming free in the package for L2. If you have not taken any course, you can take this standalone trading set as part of level 0, so you can at least become profitable in your trading the right way. Last time we also discussed these mountain tops to be used as divergence. For that, we have to raise the frequency of this chart. That we can cover once you acquire this level 0 tool, how to use this for divergences on a specific chart, so you can do options also with these. So here also, if you are doing SPY option, it became bullish, started going down, it became bullish. When market opens, right, at a certain point, you can do ES vertical options. When the market opens and the trade comes, you can do SPY options. These tools can be also used on stocks to do your stock options. Thank you very much.